Okay, so this is step 1 on the chart on the daily time frame. So we see to identify the trend. The trend is a downtrend. That means you're looking for a sell in this trade. So what we're going to do is we're going to identify the daily swing high point to the daily swing low point. That means where the market started selling from first on the daily time frame. This is Fibonacci tool. We are looking at the market. It did a 100% retracement. So we're going to mark out the two main target areas, which is the 88% and the 100%. So once that is done, what we're going to now do is we're going to go to a lower time frame. So at this point, the zones are being marked, and then let's see what happens on the lower time frame. So this is the H4. It corresponds with what the daily is saying. So that is time frame correlation. That is what we want to see. We're seeing a double tap there on the H4 time frame. That means it is at a reversal point. Now we're on the 1 hour time frame. We're going to identify the market structure here on the 1 hour time frame. On the 1 hour time frame, we identified that there was a head and shoulder pattern. So that what you see now is the first shoulder. That is the first shoulder of the head and shoulder pattern, which has two shoulders and a head. The head is higher than both shoulders, and that is a reversal market pattern. So now this is a head that is being outlined here. As you can see, the shoulder was formed first, then the head was created, and then it respected the same support area to create the head and both shoulders. So this is now the second shoulder, which forms below the head, and it is the one that normally breaks structure. So this is a outline right here of the second shoulder that was created. The second shoulder was used to break market structure. As you can see, it took out the support that was previously being maintained, and what you're going to see now is where I mark the break of structure. So I'm going to go to my objects, and you're going to see me with a rectangle, and the rectangle will be used to mark the area where the market structure broke. Before that was done, I used a line just to outline that this area is the support. It was also the 88% area, so that is why you see the line being deleted and re-added. So now you're gonna see me mark the area that was where the break of structure occurred. As you can see there, that the market sold and took out that support area to show us that okay, sellers are active in the market right now. Okay, so now I'm clearing up the charts because I've already identified that the sellers are ready to step inside of the market. So now I'm going to set up my chart looking for a sell. Right now, price is currently retracing. As you can see, the structure was broken, and now the buyers are in the market to target an area where the sellers will take over again. So this is now the H1 time frame as well. I'm going to go back for my Fibonacci tool, put it on the head of the last shoulder that was created, because there was where price started selling from last. And then I'm going to target my key areas again. So as you can realize, I am targeting the 88% area. That is my area of interest. And once that area is targeted, the next thing that will be done is join this to see what happens. So I'm doing this to see what price does. This is just an explanation that once price reaches here, I'm expecting it to start falling again. So yes, that is that. Yeah, at this point there were too many arrows on the screen, so I had to clear up some of them. Yes, so that was my outline, that once price reaches that area, it would start falling. So once I identified that as my area of interest, the next thing that I went ahead and do was I went ahead and set some sell limits. So you will definitely see that even if I'm not around at this point, once price reaches this area, I am gonna automatically enter this trade, and it's gonna play out exactly how I want it to. Not exactly how I want it to, because the market can do anything, but at this point is where I'm looking to enter the market from. So I'm gonna set my sell limits here, and then I'm gonna you're gonna just watch and you'll see. So this is the first sell limit that is created. Yes, I use a 0.0 as I use a 3 lot size, and this is step index. So right here I'm risking approximately 500 USD. Yes, so the number that I'm putting in right here at my price is the same number that the red line was, and yes, so you can see that is the same number where the red line is, saying that once price reaches there, I want to be automatically triggered into this move. I place my stop loss above market structure. That means it definitely have a room to operate, and I'm placing my take profit right back at just the 1 hour swing low. So even though it's a 30-minute, it's also the same swing low as the 1 hour. So right now I'm setting in a second sell limit. This one is much smaller because I'm not trying to over leverage here on this trade. I'm just trying to have a nice clean trade that is profitable. So the step loss is in the same area again, but this time I'm targeting a deeper zone. So I will left this trade, this second position, to run while I close profit on the first one. So I target the 1 hour, the 4 hour swing low on this particular position, and the stop loss is placed the same place as my previous one. So wait for updates on this trade.